Yo, guys, what is good? I hope you're all doing absolutely amazing and are trading safely in the markets. It's your boy VGOK here, and I've got a really special video for you guys today. So, in today's video, what I'm going to actually be doing for you is going through a full trade breakdown of a GBPUSD buy scenario executed within the New York session on Friday, the 3rd of September. Now, on that Friday, a major news event was actually released at 1:30 p.m. UK time, and it was the non-farm payroll data, which is all to do with the USA's monthly unemployment statistics. Now, this news is released on the first Friday of each month, and it is pretty normal to see, a lot of forex pairs and even some indices, to see a lot of volatility at this time. I took this trade to TP1, achieving a 1 to 13 risk to reward ratio. But the thing I really wanted to mention was that due to the volatility that was given by the NFP news release, I was actually able to close off a really quick trade, a 1 to 8 risk reward trade in the space of only 3 minutes from opening it, which I'm going to be going into a lot more detail for you guys in just a second. But without any further delay, let's get straight into the breakdown. So before we actually get into the actual charts, I just want to show you guys the screenshots before we actually get into it all. So obviously we know that the news release is going to be released on that Friday at 1:30 p.m. That's going to be the time of the NFP release, so around this sort of time right here. And to be honest, on this day, I actually only started analyzing. I think obviously, as you can see, I was looking to plan positions earlier on, but I only really started looking to take my serious entries probably about 10 to 15 minutes before the actual NFP news release. So, 10 to 15 minutes before, around this sort of time here. And obviously, as you guys can see, I was favoring the bearish side of things to start with. We had, this high point here, and then it went on to create a lower low. And you'll be able to see that later on the actual chart itself. It'll be a lot more clearer. But I had a bearish sort of point of interest I was looking at over here. We had an area of liquidity up here. So we could be potentially looking at running liquidity above here, getting into that top supply zone and then dropping. But also looking at it the other side, you've got a high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. And then we do get this. On the 1 minute, it does look a bit like a rally, then a reaccumulation, then a rally to the upside. That did break significant lower highs. So we've got this significant one that was broken and this significant one that was broken. They're the two major ones that were broken. So I did have a bullish bias from this zone as well. And to be honest, when you're looking to be placing sells and buys, at the same time on the same pair, it's what's known as hedging. You're hedging. Basically, you're accounting for both directional biases, so you effectively cannot lose. But it is very hard to sort of do, and obviously, if done wrong, you could end up, losing both of those trades, both of those positions, if managed wrong. So this was the sort of rough sort of entry I was looking at. Then if I go to the after screenshot, we can see how price, that was the original sell zone right here where my arrow is. That's the original supply zone. We almost got to it, but we didn't quite, tap into it and run the liquidity up here. So, if we had done that, then I'd maybe be looking at taking some earlier sells, slightly earlier on. But as price continued and as price progressed, we saw price get into that buy zone literally at that same sort of time at 1:30. Now, one thing I do want to stress is I didn't take this position here just as a buy limit and just set it and forget it. I knew that NFP was coming, and around NFP there's a lot of volatility coming into the marketplace, as you guys can see. But when it comes to executing around large sort of news events that have a lot of volatility, I don't really like to set limits, because sometimes when you set the limit, either it won't get triggered or it will go very close to the stop loss, or it will go into stop loss, and with the spreads being so large at that point, you may get sort of hit out at that time. So the way that I actually entered this was waiting for price to get closer and closer to the zone. I had my alerts that were going off as price got closer and closer to my entry zone. And as it got into the zone, we saw this first candle come in. I think that was at 129, and then at 130, the start of 130, we saw the influx of price coming in. So what I actually did was I market executed at this point roughly. So I watched it at that 1:29 p.m. as it got into the zone. And then, you know, as I started to see it move bullish, as I started to see it move away from the zone, I quickly looked to market execute, and I got my entry. It was pretty much roughly at the start of that zone as it was on its way back up again. And obviously, as you can see, in the space of 1, 2, 3 minutes, it hit this first TP of 1:8 risk to reward ratio, which I was looking at right there. And of course, as you can see, there was a creation of a sell to buy candle, which looked really nice. You know, it took out previous liquidity below this low right here, and you know, it gave you opportunities to go for re-entries, which is what I did for the further TP, which I achieved of, I think it was a 1:13 risk to reward ratio. So, you know, having entry around here, and I'm going to show you guys properly on the chart right now. So jumping straight into the actual analysis of things right now and looking at just that Asian session of price action, and this is obviously the day, and obviously the day of execution was this Friday, but looking at that Asian session just beforehand right here, and what we could establish from that was from this area where it made high points, it was breaking structure to the downside. You can see it's breaking structure, being bearish in nature. As it breaks below this point here, we get a mitigation of it up here, and then it continues to move downwards and break structure below this significant point right here. So zooming in and actually seeing this, you know, it would be, you know, this is that main manipulative candle, you know, that main buy to sell movement that you're looking to get. So, you know, we'd be looking at these bases in between, and also you could probably stretch the zone up to the imbalance fill as well, just to account for all of that as well. So looking at that, you know, and seeing how price actually reaches that zone and whether it does reach it and whether it reacts with it or whatnot, we're going to use that as a potential zone. And as we move the chart across, we can see that it gets into the bases quite nicely, it gets into the point of interest quite nicely. And what does it do in the end? You know, it does retest it, you know, not once, but it does do it twice. You know, you get a good reaction first time round, and then the second time around as it interacts, it then fully starts to drop and give you that bearish nature, that bearish movement. So that is why, you know, as I mentioned earlier on in the screenshots, why this was a preferred level for me to look at more sells at. You know, there's a good, a valid supplier zone at this level right now, which is why I had this as my first zone. But then as I switch it to the 5-minute time frame, you know, I think it's a bit easier to see on the 5-minute as well for the buy side. Obviously, that was the Asian session zone that we just marked up, and we've had this zone which I've just marked up consequently to that. But looking at the 5-minute time frame now, what we can see is the series of those lower highs and lower lows as a result from this sell zone right here. So I'm going to circle those on right now. So as you can see, we've got the high point there, and when we have a low, we have a lower high, and then it goes on to create that lower low. And in between all of that, you know, after we've seen this established downtrend start to form, and there probably are, you know, lower time frame, you know, significant lower highs and lower lows, but just looking at the 5-minute for now, what we can actually see is this rally base. You've got a base of 1, 2, 3 candles before it starts to rally off again. You know, rally base rally, you could think of this as a reaccumulation, however you guys want to look at this, but that is the rally base rally. That is what sort of caused price to break that significant structure. This is that significant structure point. It went on to break that quite easily, so this now becomes a potential area of demand for us. And of course, just moving price along to about half an hour, about 10 to 15 minutes before, so just moving price back to 10 to 15 minutes before the actual NFP news release, and I'm going to put a horizontal line on the news release right now. So at 1:30 is there. Let's make that a bit thicker. Okay, so we know at that time major news is going to be released. So at this moment in time, I've got my 2 zones identified right now. I'm just going to get rid of this zone for now. But I've got my 2 zones identified. If it gets into the top zone, I'd be looking to place some sells. If it gets into this bottom zone, I'd be looking to take some buys. Simple as that. But bearing in mind, I've got this news release coming very close. So whichever zone that price gets to, you know, closer to that time, more than likely it's going to be that zone that we're going to be looking to be playing within. So yeah, you know, those rough entries. I had the entry I got from market executing obviously was around here, but obviously, you know, without the news, without any, you know, big spreads being manipulated and all this sort of stuff, you could have your entry down into here in this imbalance fill, or probably the open of this candle, maybe a slightly safer. But knowing that there's a lot of volatility to come, I just sort of market executed as price gets into the zone. Now, as we forward the price, I think my stop loss was about 5 pips, just to make my life easier with the lot sizes. So as I forward the price, there we go at 125. Obviously, we're on the 5-minute time frame, so that 125. If we actually step it down into the 1-minute time frame now, you know, at 129, it really dips into the zone. You know, the minute left to go for the news release, it's in a demand zone. You know, it's filled in any sort of imbalances within this area as well quite strongly. And then one more candle to the upside, you can see the NFP volatility news release exactly bang on 130. You know, giving us that volatility and giving us that spike into profit, which is like what we like to see. So just continuing this on, and it's literally just waiting, like I said, for 3 minutes. You know, at 1 to 8, I'm pretty happy with my profits. At 1 to 8, you know, there's more than enough profit in there for the whole week. And as we forward the price, literally in the space of 1 to 3 1-minute candles, obviously 3 minutes worth of time, we've hit that 1 to 8 risk to reward ratio. Now, the second entry which I was looking to take was based off of this manipulation that we saw, this sell to buy manipulation that we saw. So just erasing that for now. And as we actually look to see where we got the second entry, it's just a simple case of seeing this sell to buy scenario once more, having our entries literally at the open of that sell to buy, stop loss again before, just below, so around 6 pips, around roughly the same sort of risk to reward ratio, around there-ish. And as we look to see how price develops, I'm going to move it to a 5-minute time frame once more. And at the moment, I don't have an established TP right now, but I'll get to where I'll see my established TP take place. So as we forward the price, it comes back down fairly quickly. It gets into the entry right there. And it actually, something to note is when you have a previous zone of demand and it respects it, chances are it's going to come back and retest the actual zone itself one more time, which is what it's done to the T. I didn't quite see that time, but it was good to sort of see, you know, that sort of theory coming into play. So as we see it coming into entry right there, it's tempting to move away, and it does do eventually, like so. Comes back to retest it one more time, and then we start to see it move away into profit quite nicely. Now, after we've seen this, there is a further zone, which is the one I deleted earlier, so I'm going to put that back on for you guys right now. And I believe this was that zone right here. So let me just move this out the way so we can see the zone. And what we can see right here is we've got another sort of sell to buy scenario. You can see there's a long wick in here, so if you're to go down into a 15-second or a 30-second time frame, you'd be able to see that, you know, something similar to this right here, you know, that sell to buy movement that we like to sort of look to trade upon. And obviously that's sort of the next zone that we would be looking to take. And of course, at this point here, we've now got our, you know, main impulsive moves to the upside right here. So, you know, from this we can use the concept of measured moves. And you guys, if you guys have seen my previous case study videos, you know I use measured moves a fair amount of time to establish my, you know, intraday TPs, sometimes even my scalp TPs. So as we can see, you know, the main impulse from here up to here, I believe, and we're going to have another measured move upon that as it goes to create the next leg up. And as you can see with these trend lines that I've drawn, I'm just sort of identifying which way momentum is moving, which way it's going to be shifting. And as you can see, it goes below this trend line here. We've got 1, 2, 3, 4 touches of this trend line, and then it goes below. And then it goes below, but then it looks to reverse to the upside. It's creating a fourth touch for this top trend line now right here as we speak. And I believe at 3 p.m. there was a further news release. So just jumping into the Forex Factory so you can see what it was. Yeah, at 3 p.m. there was this ISM services PMI data coming out for the dollar. So at 3 p.m. it's created liquidity. It's just essentially captured liquidity below this trend line. Firstly, it gives a slight movement down, but then it looks to trade to the upside and it closes bullish. And again, manipulates it a bit more, fills in this last piece of imbalance right in here, but closes bullish. And then, it gets into this top potential zone of supply as it gets in here. But looking at how this actually came into that initial buying sort of POI which I drew up just after our first main move. So, we're going to be taking the measured move from this spot right here. So having that right there and having a measured move up to about here. I think it was actually slightly higher. I think I measured my measured move. I believe it was from here when I measured it. So it's from here to about there, and then about just moving it up to around here, and it got to around that 1 to 13, I believe. Actually, might have been a 1 to 11 or 1 to 12. Actually, I think I've just calculated it slightly wrong or drawn it out a bit wrong, but it's around that 1 to 11 to 1 to 13 rough sort of risk to reward ratio. And as we look to play price, as it continues, obviously I'm still holding. And I look to close off most of my trades, if they've not hit the first sort of TP as it did here, that 1 to 8. By around 6, 7 p.m. End of the sort of day. And as you can see, at that point around that 6, 7 p.m. it actually goes off to complete that take profit point right there. And obviously I'm just going to forward price to actual current day price, and you'd see why it's actually quite a good idea to take profits at that point there, because what we see afterwards when I exit the replay mode is it's gone on to continue and market has closed all the way back down here, so pretty much to about a 1 to 4 risk to reward ratio roughly, instead of having that full 1 to 11 or 12. But this zone, it was barely tapped into, so what I'm thinking, this zone still could be valid. This is the move here which went on to break the structure above here, so this is valid zone, and also this bottom zone could be valid as well. But we'll have to see how market opens on Sunday night, and just sort of manage the trade accordingly. I've got a small position still running from this buy down in here, so we'll see. If it gaps down, then I'll probably be taking out a break even. My stop loss is at entry, so I'm not too worried. I've taken profits already on that Friday already, which was yesterday. So yeah, I'm not too worried at this moment. Now also, one last thing I actually want to go into before I look to end this video is from this image that I'm going to put on the screen for you guys right now is actually my MT5 screenshot of the actual trade I look to take. And as you guys can see from this image, as price came into that initial buy zone at 130, looking at this from the MT5 screenshot, it would have hit that stop loss had there have been a limit in place. Had there have been a limit in place with that sort of stop loss just below these bases right here, chances are that your stop loss would have been triggered, which is why I looked to market execute as price got in, waited for that slight movement away, and then got in as it was moving back up again. So getting in around that same sort of position, that similar sort of position anyway. And as you guys can see, with the line going across from the bottom of the base on the MT5 screenshot, you can see that price just about violates that before it really takes off due to the NFP release. So I just thought I should show you guys that. And obviously that was the main reason why I look to market execute, you know, not just this time, but anytime there is, you know, high sort of news event, even when there's that 2:30 p.m. spike on US 30 when the equity markets open for New York. You know, there's still a very volatile time. It's essentially like another news event. So at those sort of times, you know, I'd look to really market execute instead of, you know, placing limits and, you know, just hoping for the best. So there we have the very special breakdown of that GBPUSD buy scenario during the NFP release. I hope you guys have really learned a lot from this video and taken a lot of value. And if you did, please do like, share and subscribe. Thank you for watching, and I'll catch you guys in the next video for more of that trading source.